Okay, let us have another example. Here's the problem. Elisandra Travel Agency trial balance for month November 30, 2020. So we have the trial balance given. We have cash, accounts receivable. So we have the debit balance and we have the credit balance. Okay. So here are the transactions and the requirement. Required journalize the above transaction, open the account for each account, and post the entries and prepare trial balance. Okay, so here are the transactions. December 1, Ellie made additional investment of 50,000 in the business. Both liability insurance for 1 year, 14,005, and I already prepared the entries for that. So let us just post the entries, okay? So first, let us open the account. Okay. So we have here cash. Again, as I have said, for cash, we should have this one. Cash. Make sure that your cash T account should have a longer vertical line. Take note, we have our November 30 balance for this account, and our transactions are December, for the month of December. Okay, so for our T account, we have beginning balance. So for cash, it is debit. So we have it here, beginning balance of, that is 126,000. Okay. Then we have accounts receivable. Let's not just, let us use this one or this one. Accounts receivable. It is debit 645. So we have beginning balance, debit 645. Okay. We have prepaid insurance. For prepaid insurance, we don't have any amount, so just leave it blank. Then we have office supplies. We have, our balance is 63,000 debit. Okay. Next is furniture. How much? That is 1,740,000. So debit side. So you have beginning balance 1,740,000. Then we have office equipment. Office equipment is, there's no amount, so just leave it blank. Then we have notes payable. Notes payable is 900,000. It is credit side already. So, 900,000. You have beginning balance. Then, accounts payable. That is 285,000. Also on the credit side. Next, Ellie Capital. Ellie Capital, we have 1,680,000 credit. So 1,680,000. Then, we have Ellie withdrawal. Ellie withdrawal is on the debit side. debit, this because this is debit column, 1 million. So we have beginning balance 1,200,000. Then we have travel revenues. It is credit column. That is 5,133,000. Then we have salaries expense. Salaries expense is debit column, that is 3,771,000. So we have here 3,771,000. Then we have repairs, gas, and oil expense. Okay, there is no amount, so just leave it there. Then also utilities expense. Okay, no amount. We have rent expense of 360,000, debit column, so it is on the debit side. And we have the last one, advertising expense. Again, debit column, so it should be on the debit side, 93,000. Okay, so let us now post our entries. Okay, so we have December 1, debit cash. So, cash ledger. We have December 1 on the date column. December 1. That is 50,000. And credit Eli Capital. So we have credit Eli Capital 50,000. Okay. Then December 2, we have prepaid insurance. Prepaid insurance, here it is. So it is debit 14,500. So that is December 2. December 3, debit advertising expense 3,200. So let us have the account for advertising expense. We have already the beginning balance of 93,000. Then we have the next transaction, December 3, that is 3,200 on the debit side. And credit accounts payable 3,200. So let us go to the ledger of accounts payable dated December 3. It is on the credit side. So we have credit December 3, 3,200. Okay. Next is December 4. Debit rent expense 8,900. So we have rent expense. Rent expense debit 8,900. That is December 4. And credit cash 8,900. So again, let's go to ledger or the account of cash. Credit 8,900. So credit 8,900. That is December 4. Next, we have repairs, gas, and oil expense, that 2,880. So debit repairs, gas, and oil expense. So debit repairs, gas, and oil expense, that is 2,880. That is December 7. 2,880. Okay, this is wrong. Then we have credit accounts payable, 2,880. So 2,880. Next, 10. December 10, debit ka 62,500. So, debit ka 62,500 and credit travel revenue 62,500. So, travel revenues, we already have our beginning balance. So, plus the posting 62,500 on the credit side, December 10. Then we have December 11. We have utilities expense 2,300. We have utilities expense of 2,300. So, debit 2,300. That is dated December 11. And credit cash 2,300. Credit cash 2,300. December 11. Next, 15. Furniture 18,800. So, debit furniture 18,800. And credit cash, by the way, that is 15. December 15. Credit cash 8,800. 8,800. That is 15. Okay, so debit cash 8,800. And another credit pala. Credit. And another credit, accounts payable 10,000. We have here accounts payable. Credit 10,000. That is December 15. Then, December 18, accounts payable. So, we have December 18. Accounts payable. 3,200. And credit cash, 3,200. So, 3,200. That is December 18. We have December 21, early withdrawal. We have early withdrawal, 8,000. December 21. And credit cash, 8,000. Credit cash, 8,000. December 21. Then we have repairs, gas and oil, 1,800. So we have, that is December 24. Repairs, gas and oil, 1,800. Okay. And credit, accounts payable, 1,800. This is dated 24. And then, 25, debit cash, debit cash, 61,400. That is December 25, Christmas Day. And credit, travel revenue, 61,400. Next, 61,400. Salaries expense, 12,000. Utilities, rent, here. Salaries expense, 12,000. And credit cash, 12,000. This is 27. Next, 28. Office equipment, 7,005. So we have office equipment, 7,500. That is December 28. Credit accounts payable, 7,500. 28. And accounts receivable, we have accounts receivable, 270,000. That is 29, December 29. Okay, December 29. Credit, travel revenue of 270. That is 29. Debit utilities expense of 3,600. That is 30. So, December 30, debit side, 3,600. And credit cash, 3,600. That is December 30. Utilities expense. Okay, 30. December 30. 3,600. And we have office equipment, office equipment, 12,300. And credit, LE Capital, of 12,300. Okay, that is December 31. This one, 50,000, that is December 1. Okay, so let us now have our footing, the process of adding a column. So we have 126,000 plus 50,000 plus 62,500, 61,400. That is 299,900. Then we have 14,500 plus 8,900. 61,300. So minus 61,300. That is 299,900. 238,600. Okay, take note. When we add the column wherein you have your beginning balance, you just include it in the total. So you have 238,600. We have prepaid insurance, we have only one. We have 64,500 plus 270. 334,500. Then we have 17,1,740 plus 18,800. 1,758,000. This is 19,800. Then we have notes payable. Only one posting, so that is our ending balance already. Then we have accounts payable. Okay, so we have 3,200. And for the credit side, we have 285,000 plus 3,200 plus 2,880, 10,000 and 1,800 and 7,500. Total 310, 380, 310,000, 380. So minus 3,200. So we have our minus 3,200, so that is 307,180. Okay. Eli Capital. 1,680,000, 1,680 plus 50,000 plus 12,300. That is 1,742,300. 1,742,300. And we have 2,880 plus 1,800. That is 4,680. Okay. So for our early withdrawal, $1,200,000 plus 8,000, so that is 1,208,000. Travel revenue, we have 5,133 plus 62,500 plus 61,400 plus 270,000. So that is 5,200,000. That is 5,526,900. So 5,526,900. 5,526,900. Salaries expense. Okay. Salaries expense, that is 3,771,000 plus 12,000. 3,783,000. So 3,783,000. Okay. Then we have repairs, gas and oil. And we have utilities expense. That is 2,300, that is 5,900. And rent expense, we have 368,900. And advertising expense, that is 93,000 and 3,200, so that is 96,200. So we're now going to prepare our trial balance. Again, trial balance is the list of open accounts in the ledger with their balances. So we have Elisandra Travel Agency, trial balance. December 31, 2020. Okay. So again, we have our account titles. Debit and credit. Okay. So we have cash. We have cash. The balance is 238,600. Debit side, so it should be on the debit column. 238,600. Then we have accounts receivable. We have a wrong total before. I corrected it already because I thought this is 64,500 only. But it is 645,000. So that is 915,000. 915. Then we have prepaid insurance. Prepaid insurance, that is 14,500. 14,500 debit. So it is debit. Then we have office supplies. That is 63,000. Next is furniture. Furniture, 1,758,800 debit. So 1,758,800. Then we have office equipment. Office equipment, that is 19,800 debit, so it should be on the debit column. 19,800. And we have notes payable. Again, even if it is credit balance account, you just have to write it a line. Do not indent for the credit balance account. So we have notes payable. Notes payable is 900,000 credit. So it should be on the credit side, 900,000. Then we have accounts payable. So we have accounts payable. That is 307,180. Credit. So it should be on the credit column. 307,180. We have Eli Capital. That is credit 1,742,300. So 1,742,300. Then Eli withdrawal. That is debit 1,208,000. And it is debit, so it should be on the debit column. We have travel revenues. Credit 5,526,900. Then we have salaries expense. Debit 3,783,000. We have repairs, gas and oil expense. That is 4,680. It is debit. So 4,680. Next is utilities expense. That is 5,900 debit. And we have rent expense. 368,900 debit. And we have advertising expense. That is 96,200. Okay, so let us now get the balance, the total of debit and credit. Okay, so we have 238,600, 238,600 plus 915 plus 14,500 plus 63,000 plus 1758,800 plus 19,800 plus 1,208 plus 3,783 plus 4,680, 5,900 plus 368,900 plus 96,200 equals 8,476,380. So that is 8,476,380. Okay, for the credit column, we have 900,000. Then we have 307,180, 307,180 plus 1742,300 plus 5,526,900 equals 8,476,380. So balance 8,476,380. Okay. Again, as I have said, our total debits should be equal with total credits. Okay. So for the next step in accounting cycle, that is preparation of adjusting entry. So please wait for my next video about that.